Hi friends. Well, it's been several weeks since we were last together and a lot has happened, but it's the same advice, same outlook, just a different logo. So let's get into it. The question many investors are asking right now is, how much longer will the market throw a temper tantrum? Well, many of you know I'm from Charleston and I spent most of my life on the water. Boats, jet skis, all of the above. And the Charleston Harbor has 5 different bodies of water that flow into it. You've got the Wando and the Cooper rivers, then you've got the Stono, and then you've got the Ashley, and then you've got the open ocean coming in where Fort Sumter is. So you've got all 5 of those bodies of water converging right there at the tip of the Battery in downtown Charleston. And in my whole life, there have been less than 3 times that I have ever seen the Charleston Harbor still. Because with so many different bodies of water and movements coming at the same thing at the same time, it makes it incredibly choppy. Well, now let's replace the Charleston Harbor with the stock market. There are about 5 different current events and serious concern items coming at the stock market all at the same time. Number one, you've got the obvious with Ukraine and Russia. And I don't want to downplay the humanity and the tragedy issue that exists there. But in terms of consumer and revenue patterns, Ukraine and Russia has very little effect on Starbucks profit or on the wraparound line at Chick-fil-A or so on and so forth. So there's a real human issue. There's a concern over the irrationality of Russia's leader, and there are many things to be concerned about, which is why the current of the Ukraine-Russia issue is moving at the market, causing some gyration. So that's one. Second is obviously the interest rate hikes. I've said before, we believe that the market could sustain 8 to 10 different rate hikes and still be okay. So as we near what is likely in the next 30 days, the first rate hike we've seen in some time, that's another economic body of water moving towards the stock market. The third thing is that we had no volatility last year. In our private conversations and phone calls, we talked about what I'm calling this year catch-up volatility. There was no volatility last year, and now this year we're catching up. So you've got Ukraine and Russia, you've got interest rates, you've also got catch-up volatility, but then you have that this is a midterm election year, and things just get weird. So expect that to continue. And the fifth thing we have moving towards the stock market all at one time is the adjustment of forward-looking earnings. So the conversation, as companies have reported their fourth quarter profits and are now giving guidance for what the future looks like from their perspective, the conversation has looked something like this. Apple says, hey, listen, we've had a great couple of years. We can't keep growing at 40% a year. We're going to grow at 18% a year. And the market says, oh. Let's think about that. Since when is 18% a year a bad future-looking growth pattern? And so we've got to readjust our thinking that, hey, we can't keep speeding down the highway at 100 miles an hour for growth. 60 to 70 is just fine. So when you take all of those 5 things compressing on the stock market at one time, you get the same thing you'd get in Charleston Harbor, which is choppy waters, lots of winds, boats being thrown all over. But here is what is most important. Even where we sit today in the early part of March, there is no reason for us to adjust down what we believe is still Dow 40,000. That is nearly a 20% move from where we are today. It is as important as it's ever been that your risk at the family level, at the individual level, and even at the account level is dialed in with who you are as an investor. But when we look out to 12/31/2022, we're still expecting double-digit returns. Thanks for watching. You'll keep seeing more of these, and I look forward to seeing you next time.